All right, everyone, welcome back to the Alpha Architect YouTube channel. Today, we have another special video for you today where we get to talk about our products and our holdings. And this is sort of a breaking news episode, as yesterday we found out through 13F filings that Buffett has a $266 million stake on ULTA Beauty. The stock jumped over 13% after hours after the news, and Berkshire now owns over 15% of the company. Now, in this video, we want to talk about how the Alpha Architect US Quantitative Value ETF, ticker QVAL, which seeks long-term capital appreciation via value investing, owned ULTA before Buffett got to it. And the way we know this is because we bought ULTA on May 1st, 2024, while Berkshire's 13F did not disclose a position on May 15th, but it did disclose holding ULTA on August 14th, 2024, meaning Berkshire bought ULTA at some point between May 15th and August 14th, while QVAL has held it since May 1st. To talk about this, I have with me Alpha Architect President Ryan Curlin. Welcome, Ryan.
Hey, Jose. Happy to be here.
So I think the question we're going to try to answer today is, why did Buffett pick up this company? Now, unless we hear it from Buffett himself, it's almost all speculation. But we do know that this is right in line with how Buffett generally likes to invest. Buffett generally prefers cheap, high quality, and safer or low volatility stocks. So I think in order to understand why Buffett would look at this company, I think we need to look at the fundamentals. And I have some interesting stats as of August 5th, 2024. And here they are. The EBIT-to-TEV of ULTA was 9.34% versus 4.2% for the market. Now, this generally means the higher the number, right? Because we want EBIT to be higher and TV to be lower, all things equal. The higher the reading, the cheaper the stock. Price to earnings, 13.3 for ULTA versus 27.32 for the market. Obviously, the lower the reading here, the cheaper the company. Asset growth, 4.24% versus 13.2% for the market. Now, generally here, the lower the number, the less aggressive the investment, which we generally like. Return on assets is 22.8% for ULTA versus 13.7% for the market. And then gross profit, 81.8% for ULTA versus 40.9% for the market. Now, when QVAL first bought ULTA at the beginning of May, it had an EBIT-to-TEV score of about 8%. So a screaming cheap company. Ryan, do you know what ULTA actually does? Because I talked to my wife about this yesterday, and I totally got it wrong. I thought it was one thing, but it's something else. What does ULTA actually do?
I did not know before today, but ULTA is the largest beauty retailer in the U.S. It slashed its guidance after the first quarter, which brought the stock down a ton, and it has just not been a winner over the past 2 years, which is often the case with value stocks. They're often generally hated by the market, and that's why they become so cheap.
So Ryan, here's the big question that we're really trying to get to. How does QVAL end up owning a stock before Buffett gets to it? How did that happen?
So QVAL seeks to buy the cheapest, highest quality stocks, similar to what Buffett has done historically in the past. Though Buffett is a fundamental stock picker, we are systematic. For us, we have these quantitative screens. High level, we start with the top 1,500 largest stocks by market cap in the US for QVAL, and then we begin to dwindle it down. We have a big value screen in there where we get down to the cheapest 10% of stocks in the US. And then from that cheapest 10% of stocks in the US, then we're gonna take the highest quality from that cheap basket. And Warren Buffett is just more discretionary, right? So he's gonna look at metrics like we look at. He might look at the PE of a stock or the EBIT-to-TEV of a stock. And he's gonna look at maybe the return on assets, and then he's gonna look at more intangible type things. What he thinks of the quality of the management, and what he thinks of the potential growth rate into the future of the market that company is in, right? Things like that. And then he's going to take that all into account and make some calls. For us, we're not making calls. We're just taking the data and based on the academic evidence that led us here, we're like, hey, in the past, this thing worked really well. We believe it's going to work. If we use these screens, it's going to work really well in the future. So let's do it. And so that's the difference between systematic and a more discretionary fundamental investing. And then how did we get there before? Well, that's it, because we're just screening. We rebalance monthly. And we happen to probably view at least somewhat similar metrics.
Yeah. If you want to learn and see how we come up with these Buffett-esque names, you can head to alphaarchitect.com/funds/QVAL, or you can simply get in touch with any of us. We'll be happy to answer any questions you may have. From me and Ryan, we hope you have a wonderful day, and we'll see you next time.
See ya.